Still in the country, experts in Nigeria's financial technology sector have called for an enabling environment and a broader investment space to bridge the financial inclusion gap in the country. At a forum of tech experts in the nation's commercial capital, Lagos, stakeholders say the country has proven its potential with a massive digital banking adoption amidst the cash crunch era, one they say can be leveraged upon with proper infrastructure in place. News Central's Adesewa, Odusoga reports.
The drive for the adoption of electronic and digital bank services in Nigeria began with the pandemic lockdown in 2020, which saw a restriction in face-to-face transaction. Fast forward to 2023, Africa's largest economy witnessed a rapid progress and unwieldy shift away from a cash-dominated economy with the introduction of a newly redesigned currency note and a curb in money supply by the Central Bank of Nigeria. These have been argued to possibly edge the country further to bridging the financial inclusion gap, where more than half of the adult population are financially excluded.
Financial inclusion is not a light bulb moment. It's something that we all have to aggressively work towards. But then again, there are complementarities to financial inclusion, that when we're all financially included, the poor have access to better products and services, and then they can retain some of the income that they would have otherwise used, and that can help them improve their livelihoods and improve the environments in which they live.
In 2020, we had about 30 million Nigerians, adults, that were financially excluded. By 2021, that amount has moved to almost 50 million. And that means we have about 50% of our adult population excluded. Doesn't mean that we didn't make strides or we're not able to cover the gap. It's just that the pace at which the initiatives have been coming are not matching with the rate at which population is growing, and by extension, how people are becoming of age.
Financial inclusion has to do with partnerships. You cannot say a bank cannot say they're solving financial inclusion. Meanwhile, for you to be able to offer financial services to a customer, you need the customer to come to your bank to open up that financial. So POS, payments infrastructures like POS, SMEs that also power these local entrepreneurs is also a way that we can also harness and push further.
Analysts are also of the opinion that financial inclusion in Nigeria should go beyond payment services, but also insurance, savings, and investment, amongst others, and the need to also reach the far north and the most rural communities.
Why can't I buy a basic insurance at an agency banking platform? Why can't I take a loan or access credit at an agency banking platform? We know there is infrastructure that is required to do that, but there is also education on the benefits of doing that, because it then becomes a collaborative effort by all the different players.
Mobile banking transactions in Nigeria expanded to almost 3 trillion naira from the 1.1 trillion naira recorded the previous year. With a proper infrastructure and more public-private partnership in place, analysts believe Nigeria may be closer to meeting its target of achieving 95% financial inclusion rate by 2024. Adesewa Odusoga, reporting for News Central.